Have you ever wondered how could you invest in China's next wave of technology, from AI and electric vehicles to advanced manufacturing, all in one place? Well, there's actually an ETF that does exactly that. The Rayliant-ChinaAMC Transformative China Tech ETF, ticker CNQQ. It's designed to capture the fastest growing and most innovative companies in China's tech sector, and it has quietly outperformed many of its peers over the past few years. What CNQQ is? CNQQ tracks the selective China AMC Transformative China Tech Index, which includes 100 leading Chinese technology companies listed both onshore in mainland China and offshore in Hong Kong. This index isn't limited to internet giants. It represents the full spectrum of China's transformative tech industries, covering AI, semiconductors, robotics, new energy, biotech, and more. Selective China AMC Transformative China Tech Index. Since its inception on May 7, 2019, the index has delivered a cumulative return of plus 105.62% in USD TD. Why China tech is booming, you may wonder. China's technology sector has entered a new growth phase. In 2025, we've seen a major AI-driven rebound led by breakthrough like DeepSeek, a low-cost, high-performance AI model that's reshaping global computing dynamics. AI is accelerating across industries from healthcare and robotics to semiconductor design and manufacturing automation. This has pushed China tech indices like the Hang Seng Tech and Star 50 to outperform global peers such as Nasdaq 100 this year. And CNQQ is positioned right in the middle of this transformation, combining exposure to the AI innovation and manufacturing upgrades. The companies behind CNQQ. Let's talk about the top holdings. These names tell the story of modern China technology rise. We have Tencent, 10.2%, China's social and gaming giant, but also a key investor in AI and cloud services. We have Alibaba, 8.4%, transitioning from an e-commerce to a full ecosystem of cloud computing, data intelligence, and digital payments. We have CATL, 7.2%, the world's largest EV battery maker, powering global brands like Tesla and BMW. Xiaomi, 7.1%, not just smartphones. Xiaomi is expanding into EVs and smart home ecosystems. Meituan, 4.5%, a leader in on-demand services in food delivery powered by AI logistics. BYD, 2.4%, a global leader in the EV production, recently surpassing Tesla in unit sales in several markets. Nora Technology, 2.2%, China's answers to semiconductor equipment giants, key to the local chip independence. Together, the top 10 holdings make up over 50% of the ETF, giving investors exposure to the most influential players driving China's technological future. Performance and comparison. When we talk about investing in China's technology sector, we have two ETFs often come up. CNQQ and KWEB both represent different sides of China's tech story, but with very distinct focuses. KWEB mainly tracks China's internet and platform economy. Companies like Alibaba, Tencent, JD.com, Meituan, Pinduoduo, and Baidu. It captures the growth of online services, right? The e-commerce and digital platforms that have shaped China's economy over the past decade. Now, CNQQ, on the other hand, takes a broad approach. It focuses on what many call hard tech, industries driving China's next phase of innovation like AI, electric vehicles, robotics, semiconductors, biotech, and smart manufacturing. Now, it includes both A-shares and Hong Kong listed stocks, offering exposure to some of the most transformative sectors inside China. The two ETFs complement each other in a way. KWEB reflects the strength of China's digital economy, while CNQQ captures the country's push towards industrial and technological self-reliance. In short, CNQQ tells a different story, one that's just about online growth, but about the deep technological transformation happening in China's manufacturing and as well in the energy and innovation ecosystems. This index integrates profound insights from CNQQ, one of China's largest and most respected asset managers. It focuses not only on the market cap, but also R&D intensity and innovation metrics, meaning the companies are chosen for their future growth potential, not just size. Right? With China's renewed focus on high-tech manufacturing, semiconductors, and green energy, CNQQ serves as a long-term gateway to participate in that growth, from AI labs to EV factories. So, if you believe in the future of China's innovation economy and you want diversified exposure across AI, EVs, semiconductors, and biotech, then CNQQ might be one of the most comprehensive ETFs to consider. Check it out and do your own research. Just search CNQQ or visit the link in the description for more details. Just a quick heads up, right? This isn't financial advice. Of course, it's just me sharing info and my thoughts. Always do your own research before investing. So how can investors actually use CNQQ in their portfolios? CNQQ can serve as a growth-oriented satellite position, complementing your core holdings in US or global equities. For those already invested in major tech ETFs like QQQ or SMH, CNQQ offers exposure to the other side of the global innovation map, China's emerging giants in semiconductors, automation, AI, and electric vehicles. You are not just betting on Chinese companies, but on the evolution of global tech supply chains, where China plays a growing role in the AI chips, robotics, green energy, and next-generation manufacturing. Now, many investors use CNQQ to balance exposure between Western and Eastern innovation hubs. It provides a strategic hedge in a world where technological dominance is shifting and innovation is becoming more geographically diverse. The future outlook. Now, looking ahead, the next decade of Chinese tech will likely be defined by self-sufficiency, innovation, and scaling up. Beijing's policies are heavily supporting domestic semiconductor development, AI research, and clean energy transitions. That means companies in CNQQ's index aren't just growing, they are being backed by long-term national strategy. Meanwhile, the global demand for EVs, smart devices, and automation systems continue to surge, creating opportunities for firms like BYD, Cattle, and Xiaomi to expand internationally. We are also seeing cross-border collaboration in areas like AI chips and renewable technologies, which could further boost the profitability and global competitiveness of CNQQ's holdings. Now, if you believe that the next big wave of innovation will be hardware-driven and AI-integrated, CNQQ is positioned at the heart of the transformation. Now, of course, no investment is without risk. Now, CNQQ's performance is closely tied to China's regulatory environment, geopolitical relations, and macroeconomic trends. Now, technology cycles can be volatile and markets can reach sharply to policy changes or earnings surprises. Currency fluctuations between the Chinese yuan and US dollar can also affect returns for international investors. So while CNQQ offers exposure to China's high-growth tech frontier, it's best viewed as part of a diversified long-term portfolio, not a short-term trade. So, to wrap it up, CNQQ gives you a front row seat to China technological evolution. From AI chips to EV batteries and from automation to biotech innovation. Now, if you are looking for exposure to the future of global tech, not just Silicon Valley, CNQQ might be worth your attention. But again, this isn't financial advice. just education content for you to explore. If you found this video helpful, hit the like, subscribe, and drop a comment on what other ETFs or markets you'd like to be breaking down on the next video. See you guys on my next recommendation. Thanks for watching. Peace out.